Hello, I'm Bryce Noor, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Monday, August 19th, 2013. Market analyst Paul Bergner and I are counting down the days to the Farm Progress Show in Decatur next week, and it looks like we'll have plenty to talk about thanks to grain markets in the throes of late-season weather markets. We kick off the show with a bang on Tuesday, August 27th, with release of our first survey of planting intentions for next spring. I'll be discussing them and marketing opportunities for 2014 on Tuesday at 9 o'clock in the Farm Progress Show seminar tent on 6th Street, right next to the Prairie Farmer Hospitality Center. I'll also be speaking at 1:30 on Wednesday and Thursday. Paul takes the afternoon shift on Tuesday, then opens up the morning on Wednesday and Thursday. Paul, your topic is, where are the grain markets headed this fall? It looks like you'll have plenty to talk about.
You know, this is going to be an interesting fall. It's going to be a challenging fall, I think, as we see what potentially big crops will do with this fall, and we really do have some marketing challenges facing us, and I'm going to try to explain those as best I can through the show.
Well, soybeans lead the market higher. USDA's lower than expected estimate last week was followed by forecasts for hot, dry weather, just as pods need moisture to fill. Certified acreage data from the Farm Service Agency reinforced last week's lower acreage forecast by USDA, putting even more pressure on yields and how tight old crop ending stocks turn out. USDA's estimates for 2012 crop crush and exports look about right, unless demand changes in the final weeks of the marketing year. But that still means a lot of imported soybeans will be needed to keep the U.S. from running short before the new crop harvest begins. November futures jumped above its spring and summer trend line today, as well as the 200-day moving average. My forecasting models are showing tighter carryout than USDA forecasts for 2013 as well, thanks to better demand, even if the crop doesn't get smaller, supporting potential for rallies above 13, perhaps to 14 or 15. Paul, is this the start of something bigger?
You know, I think it definitely has the chance to be the start of something bigger. Weather's obviously going to drive it in the short term, and then I think that demand is a big issue as we come on through the year with this crop. I'm not ready to call $15 beans, but 14 might be there if the forecast for hot, dry follow through. Another bushel or two off of the yield number brings us right back to last year's very tight supply. So there's really some room in there for higher prices. It'll only take a little timely rain though to dampen this rally. So we really are going to watch the weather as we move forward for the next few weeks.
The corn market looked like it was headed nowhere fast until last week. First, USDA's yield estimate was lower than expected. Then the FSA data showed farmers were prevented from planting 3.4 million acres this spring, which suggested harvested acreage near the 86.5 million we found in our survey. All of a sudden, the 13.5 billion bushels we estimated from our own survey, which was the lowest in the industry, is looking more likely. Still, that's a lot of corn, and the rebound in demand looks slow. While my model is showing selling targets from 481 to 544 currently, only deferred contracts have moved into that range yet. Speculative hedge funds finally have started buying again after putting on a record bearish bet in August. What do you think, Paul? Will those August lows hold once harvest starts? And what's the upside for corn?
Well, as you said, that 13.5 billion bushel crop is still a large crop. That's an awful lot of corn to move into the system, so there is maybe a limited upside here. I'm not sure we've seen the lows yet. I think there still may be some lower prices out there as we get into harvest if this crop is truly that large. The weather's adding some support, and I think there might be some opportunity here to make some catch-up sales as we get close to that $5 number. Again, this one's just like soybeans. A little rain could really dampen this market as well.
The wheat market got its fair share of good news lately. Early season export sales got off to a good start, and carryout is tightening according to USDA. Still, U.S. wheat remains priced out of the market in North Africa and the Middle East. Other exporters appear to have decent, if not good, crops. The price discovery period for winter wheat futures began last week with good rainfall across the plains. While much of the region remains dry, the long-term drought isn't as pervasive as it was last fall. Soil moisture conditions are better for soft red winter wheat, though planting could be delayed if the corn and soybean harvest is late as well. Paul, you've been recommending sales of old crop wheat. What about 2014 bushels above the revenue protection guarantee? Is it time to get starting on those?
I think we're getting near that range where 2014 sales might be a prudent decision. We've got July 14 Kansas City's over 7, and July Chicago is in the 670 range. Those are attractive as a starting point, place to maybe kick off those sales as we look forward. Basis is awfully wide out there in July, so I'm really more comfortable pricing that on the board with expectations that basis is going to narrow. I'm not expecting the same basis that we got this year, where it got awfully strong, but I do think we want to let that basis float a little bit yet.
Well, thanks, Paul. The buzz comes from the Farm Progress Show grounds next week. We hope to see you there.
This Farm Progress Show from August 27th to 29th in Decatur, Illinois is coming up fast, so be sure to download the show's mobile app for your iPhone or Android smartphone. Find out more at the Farm Progress Show website at farmprogressshow.com.